All right. Good morning, everyone. Tim Davis again, coming to you guys with another early morning market review. Early morning market review. All right. And pretty much it's like we're starting off again like we did on yesterday. I'm going to point out we're still pretty much range bound on the overall markets. Keeping in mind that we do have data coming out on Friday. CPI data comes out this Friday. Then next week, Fed rate decision and Fed meeting or conference next Wednesday, 2 p.m. So that's two possible market moving events that are coming up. So this range bound market could stay in effect for a few more days, possibly. We got to see how this pans out on today. But with that said, let's take a look at the Dow Jones Futures. And as you'll see, this is a daily chart, Dow Jones Futures. So we're pretty much been stuck in between the 20-day and the 50-day moving average. So you see that area I just shaded. We've been stuck in between those two levels since May the 27th. Today is June 8th. So we've been stuck in between a range. And it kind of looks like a bear flag. So we have to see how it pans out. But this 50-day moving average is becoming a strong level of resistance. So the slightest little hiccup, you can see a definite move back down below the 20-day moving average. That is a look at the daily chart of Dow Jones Futures. And again, folks, we are still in the overall bear market. That has not changed. So we're experiencing this rally within the bear market. All right, here's the S&P minis futures, same scenario, stuck in that range. So this range is still playing out, stuck in that range between the 20-day moving average and the 50-day moving average. If price action over the next couple of days do not find a way to break back above the 50-day, we're going to see a big, probably sharp reversal to the downside eventually. All right, that's a quick look at a daily chart of the S&P minis futures chart. Here's a look at the Nasdaq. Same scenario, except the Nasdaq is even closer to its 20-day moving average, but it's still range bound. So there's a range above its 20-day. It's just been bouncing off that 20-day, using it as a level of support, still a ways off from its 50-day, which is way up top. But it's pressing hard on this 20-day. So one hiccup, we go lower and drop below that 20-day, and then that could spell a bigger pullback. And last but not least, the Russell E-minis, same scenario, range bound between the 50-day and the 20-day moving average, with the Russell pressing hard up against that 50-day right now on the daily chart. So the day could be a telltale signal as to which way the markets go in the near term. But again, we're still overall in a bear market. Now, if you look at the, I will expand this out, look at a bigger picture of the weekly chart. So you see we're getting that little bounce. It's got a little bounce in the NMA, but look at that trend line range that I drew. So this is a longer term trend line or a range that price action has been in. And we're in this, you can see clearly we're still in this downward trending pattern. Been in this downward trending pattern since November. On a weekly chart, it's like almost a wide megaphone type pattern towards the downside. So we've been in this downward trending channel since November, and we have not broken back above that downward trending channel to restart a rally back to all-time highs. It doesn't look like that's happening right now. We are buttoned up against resistance on a weekly chart. Let's look at the weekly chart of our Russell. Let's hop on over and take a look at the, we're going to do this with a little less indicators. That's a clear picture of our Russell E-minis. Take a look at the S&P E-minis. Same type of scenario. Been in this downward trending channel since the beginning of the year. To the bottom of the channel, to the up top of the channel, bottom, top of the channel. With price action now coming into contact with that 50-day moving average on the weekly chart after a bounce, and still muted below the trend line of this downward trend, upper trend line of this downward channel. That's the S&P E-minis. Nasdaq, same scenario. Still in that downward trending channel. Unless prices find a way to rally hard and break above this downward trending channel, we'll stay in this bear market. So that's the downward trend, long-term downward trending channel of the Nasdaq. And here is our look at the longer term weekly chart of the Dow Jones E-minis or futures chart, downward trending channel. And it is very close to the upward trend line on this downward trending channel. So that's going to be a strong resistance. So we can see a hard reversal in a Dow before anything else. So there's something to pay close attention to. Then on yesterday, folks, guys are playing it. There's a lot of other stocks underneath the surface. That is like some stocks are doing well, some stocks are doing horrible. So there's a pick and choose the battle in this up and down range. And Target, folks, pretty much laid out a pathway. And Target was just a fair warning as to how a lot of companies are actually faring underneath the supply chain issues and inflationary issues. And Target tamped down its guidance again. So retail stocks are taking a brunt, you know what I'm saying, with all this movement back and forth. So I think some of these retail stocks will continue to struggle due to supply chain issues and inflationary woes. So there's a lot of pressure all over. There's a lot of stocks moving around within this market, whether it be to the upside or to the downside. Another sector to pay close attention to. No, not that one. Housing sector. Some of these stocks are just starting to. It's continuing this move down. Rocket Mortgage is one that showed some unusual put option activity over the past month or so. In the near term, Rocket is back to a level of resistance. So it has an opportunity to break out above this 50-day moving average. But if it doesn't, we can see Rocket continue a move back down in a sharp fashion, back towards that $6-7 level. It looks like the full stochastics is showing oversold, so we could see a bounce in the near term. When it's percentage oversold, could see a bounce in the near term. But the bigger picture of things, you still see that it's stuck in a longer term downtrend, well below its 50-day moving average on the daily chart. Some sectors or some stocks areas to pay close attention to for some moves on the upside. Can't be ignored, folks. The K-Web, which is the China Internet ETF, it has been trying to make some moves to the upside. With that said, I still could see more room, more movement in the K-Web to the upside. That's a possibility. Excuse me. So looking at a weekly chart of the K-Web ETF, it is been making a move back up towards this 50-day moving average, which could be a target, a near-term target for these China stocks ETF. Full stochastics, wins percentage, all in a big move higher. So we could continue to see an outperformance of this K-Web and stocks within it, like Billy, like Btu, like Baba, like JD.com, like some of the electric vehicle names. We could see a continuation of this pattern, folks, until we possibly get up to that 50-day moving average on a weekly. That's something to pay close attention to. That's a place where you can possibly take advantage of an upsize move. And then, of course, take a look at crude oil. Crude oil, folks, is bucking a breakout. At the top of my screen, I have it's a split screen where I have the 4-hour chart to my left, daily chart in the middle, weekly chart on the end. And if you pay close attention, take a very close look, you see this rounded type pattern on the daily chart. The 4-hour chart, after we pretty much started a cup and handle formation. We reached that level, pulled back, went up, came down, and it's like we are ready to complete the pattern and a possible breakout above that level. That could send, and this is the 4-hour chart on the left, that could send crude oil prices much higher if we get that breakout in a big way above, let's say 121. So we see a breakout above 121, and definitely if we see a touch of 122, we can see a big move to the upside. Ultimate goal, look at this daily chart on my right. I think we could possibly see a move right up to that 129 level in the near term. Then that 129 level is probably going to act as a temporary level of resistance. So we're watching that on crude oil for the next week or so. That 129 to 130 level over the next week or so, we could be ready to challenge that level in crude. And if you look at a daily chart, the weekly chart on my right, I'm expanding this one because I want to point something out here. So crude, if we find a way to come up and challenge that 130 level, I do think that'll be a level of resistance in the near term. But if we get some type of, if we break through it, then great. Crude oil could just continue to rally in a big way. If we don't break through it, I still think we still have a chance to do so. We may see a slight pullback, something like this. If we don't break through it, I don't know what's going to happen until we get there to form another cup and handle type pattern on the weekly chart before we round out. And then ultimately, folks, let me draw this out. I do think crude oil has the ability to challenge the high of 147 that we seen back in 2008, 2009. Crude oil has that ability, folks. So sometime this year, it has that ability. So pay close attention to that for possibly huge breakout in crude oil. And then we got to start seeing what happens then, because we see what happened last time when we got up to that 147. Crude oil sold off, and that was between 2008 2009. And we know what happened during that time. When crude oil sold off, that was like the capitulation phase, and everything continued, just got to wash out. The stock market was already starting to fade like it is now. And then when crude oil joined the party, it was a big washout. So that's something to pay close attention to as we continue to see higher prices in crude. All right. Oh, one more thing we'll take a look at, and that is the VIX. So the VIX is still having us set up. And we're going to look at the VIX future since that's what's running right now. So again, I did highlight on, did I get rid of that? No, let me go to, let's do the VIX futures. So that range that I was expecting the VIX to possibly hold, you tip below it just a tad, but look where the VIX is resting. And I'm going to point out some things that are starting to show some positive momentum in the VIX. So now the VIX is retraced all the way back on the daily chart. Where to? to a strong level of support right at that 200-day moving average, folks. Look at that. I want to really focus. I really want to stress that, because when you hit a major moving average like that, especially on an oscillator, that's all VIX is. It's oscillating index, which means it doesn't have earnings and anything like that. It just operates on price action. So when you hit that level, normally you see some type of bounce. When we hit the 50-day moving average here, we had a bounce, and then we sold off again, dropped right through the 50-day, back down to the 200-day. The last time we were at this 200-day moving average, we on the way down, eventually price found a way to get to hover around this 50-day, this 200-day for quite a bit before it took a decisive move higher. Now, we're already in oversold territory on the Williams percentage. We're already in oversold territory on the full stochastics. And we're already starting to get some yellow bars starting to form on the T10 squeeze, meaning that the move to the downside is starting to get exhausted, and the VIX is trying to build some momentum for a possible bounce from this level. So what happens if we get that bounce? Then, of course, that means S&P first starting with S&P, because the VIX is opposite related to the S&P. So VIX goes up, S&P goes down. So that's something to pay close attention to between now and this week and next week. We are at a strong level of support for the VIX. All right. I think that's all I have to offer, with the exception. Oh, I did want to do this. I want to point out a couple stocks individually that could be something worth taking a look at if you're looking for some positive momentum to the upside. A couple standouts that I've been watching in a big way, and one of my I'm actually in. Already mentioned the K-Web. That is one that I picked up here recently for continuation to the upside. So K-Web in the near term still showing strong momentum to the upside, and it shows some unusual option activity big time over the past week in the call option area. So there was some big time call option activity showing in the K-Web. With that, we could see the K-Web rally back up to around 50. That's a possibility, folks. If it rallies back up to 50, that would take it up to the 50-day moving average on this monthly chart over here, and right back up towards that 50-day moving average, or just above that 50-day on a weekly chart. So that is something to pay close attention to, which is what would probably explain the big time it was unusual, the big unusual call option activity that's been popping up in the K-Web over the past week. So that's a place where you can hide and put some money in. Again, it's currently in a nice uptrend and still trending higher. So that is one to pay close attention to, or to consider. Another one, Btu Peabody Energy, which is a play on natural gas and in the energy sector. This one also showing that nice cup and handle type pattern, especially as you can see here on this weekly chart. Look at that, almost textbook twice up there. Then we're doing another one here. Looks like it's just constantly bouncing off of this 50-day moving average on the weekly chart. Same scenario here. Pull back to the 50-day moving average on the daily chart, and we are starting to move higher. So BTU is another one to consider or pay close attention to if you're looking for some positive momentum to the upside. BTU. Another one, ExxonMobil. ExxonMobil is just showing some strong momentum to the upside, and it looks like it doesn't. It's in a strong upward trend in general. So that's something to pay close attention to. And it's been in this nice strong uptrend, and doesn't like this uptrend wants to give up anytime soon. And I even looked at how overbought it is, and keep in mind that a lot of stocks, even on a monthly chart, they can stay in an overbought territory for a while. And when price action overbought territory right now on XOM on the monthly chart, it's showing that this momentum is not giving up steam anytime soon. So this may be a strong play for a while. There was some unusual option activity that was spotted in the XOM for some contracts that expired out in January up to the 150 strike. So folks are taking a big bet up to the 130, and I think 150 is positive. So folks are making some big bets that this energy play has a lot more room to the upside. So ExxonMobil, again, that is one to pay close attention to and possibly consider. And one more, I saw this one, which displayed some early morning pre-market movement, which is a play on solar. And I like this pattern on a monthly and a weekly chart. Look at this pattern here on DQ, again, which is a play on solar energy. You see the sharp move rally back up above its 50-day, above all major moving averages on a daily chart. Look at that. Stayed down here in the valley for quite a bit. And then all of a sudden, it started an upward trending channel on a daily chart. That's strong. Upward trending channel. Look at the weekly chart. We were as high as 130 back in the beginning of 2021. Came down, broke back below its 50-day moving average on the weekly, and look at that. And now it's even above its 50-day moving average on the weekly chart. This stock is showing some. It is defying the odds of a downtrending market, folks. It is defying the odds of a downtrending market. That is DQ. And we have broken back above its 50-day moving average on the weekly chart. And as it relates to its and look at that, as it relates to its 200-day, it's above all major moving averages now, even on the weekly chart. If I put up a monthly chart, look at that, above all major moving averages on the monthly chart as well. And let's go back over here to this screen. This one is defying all odds. Not only is it defying all odds, it's defying it in a big way, even on the longer-term charts. And look at the sell-off down to the 50-day moving average on the monthly, and it's like it's ready to go back up. Look, we got into overbought territory. You see the overbought territory on the TTM squeeze, and look what's happening now. Full stochastics on a monthly chart starting to hinge back out of oversold territory. I'm sorry, I've been said overbought, I meant to say oversold. It oversold territory, got that rounding bottom bounce off of that 50-day moving average on the monthly chart. And now look at the oscillators. Full stochastics hinging higher. Wins percentage hinging higher. And RSI hinging higher. Even in a downward trending market. So there's always winners, even in a crazy market. And I think DQ is one of them. All right, folks. So I gave you guys a quick look at the overall direction of the market right now, what the technical analysis is showing. And I gave you guys some ideas and some possible stocks to play. So hopefully this is information that you guys can use. Enjoy the rest of your day. And before I go, let's glance at that VIX futures one more time. Here's the VIX futures. And let's look at again, what we're paying close attention to. This 4-hour chart is showing the price has been stuck below this 50-day in a strong way on VIX futures. But we are now facing a possible bounce off of this 200-day moving average. And look at the long stretch. I told you guys before, we've been having a long stretch of red in a row. Got a couple of greens here now, but the overall trend was still down for quite a bit. And now we're starting to see a move off the 200-day moving average. Does that hold, or do we break below it? We've got to see, and that should probably play out between sometime this week. All right, and one last glance at the Dow Jones, and it is running into some serious resistance. Look at that, running into some serious resistance right around there. All right, so today is probably going to be another one of those wild days, so be prepared for some wild moves, and until this range ends up breaking. All right, folks, have a great day, and I will catch you guys on the next video.